and get started. We're going to share our screen here so you can see. Tonight, again, the topic is cryptocurrency, and just really looking to have a nice brief conversation on an overview of what it is and how it works and help answer your questions. So Tom is here with me. I'm Clayton. I think you guys may have met us. You've probably seen us in the office a little bit. And again, we've had a lot of conversations. So we're going to start off pretty simply, Tom, with just the really basic, what is cryptocurrency?
Sure. Yeah, we can even take the charts off, but we just have everybody on. So I feel better talking almost directly to everybody. Good evening. Welcome. Cryptocurrency has just been very popular in the press lately. Coinbase did an IPO last week. That was very popular. This Dogecoin, D-O-G, I'm going to call it Dogecoin. I'm not sure exactly how you pronounce it. But anyway, it's up 8,100% this year. So if you had $10,000 in it on January 1st, you now have $810,000. Unfortunately, none of our clients have that because it's very likely to go to zero sometime very shortly as well. So anyway, it's a get rich quick, right? Get rich quick. Why not? And that's what's making it so popular. But there's some interesting things I think we should talk about that maybe makes it a little interesting. First of all, it's cryptocurrency. It's a currency without borders, right? We have America, we have dollars. Japanese have the yen. Europeans have euros, right? But cryptocurrency has no borders. There's no central bank governing it. It's basically a software program. So the whole point of cryptocurrency was to avoid the middleman. Right? You want to do a transaction with anyone around the world, you don't have to go and exchange your dollars for yen and buy something in Japan. You can just find that person in Japan and you could send them cryptocurrency and you could get whatever product or service you wanted to buy. So anyway, the point of it is really to eliminate that middleman. Think about when you go to the store or when you're online and you're buying something with your credit card, when they swipe that credit card, between the 10 to 15 seconds that it takes for that receipt to pop out or for that to be approved, that machine that swiped is actually calling your credit card's bank to seeing, do you have enough credit to make this purchase? Okay. And they get a fee for that. Well, with cryptocurrency, the whole point was, this is ridiculous. Why are we paying all this money to these financial institutions to verify these things? Let's use cryptocurrency, which has already been verified as legitimate, and we eliminate all those costs. So this is the point of it is convenience and efficiency. Okay. Anything else you want to add to that, Clayton?
No, I think one thing we talked about is the wallet.
Yeah.
Which is kind of interesting because, for us, if you're holding American dollars, a lot of us walk around with a purse or a wallet, and we have a credit card or we have a dollar bill that actually sits in the wallet that we carry around. And if we lose our wallet, then we have to call our credit card companies and get those changed. And the cash in the wallet may just go away if someone happens to find it and not, call you or give it back to you. Where with crypto, there's also a wallet that you have, but it's a digital wallet. It's online, and that's another advantage to it. It's supposed to be very secure. Now, the problem some folks have had, and
you can still lose your wallet
or your password,
which is by losing your password,
just like losing your wallet. And I'll tell you, there's folks that mined a Bitcoin back in like 2007 or 2008 when this first thing was starting. Bitcoin was absolutely worth nothing. You could mine a couple Bitcoins for, relatively, it's pretty easy to do it if you had a couple of computers and put some time into it. But then they put these Bitcoins in these wallets and forgot about them for 5 years. And Bitcoin literally was worth not very much at all until 2015, 16, 17, when it really blew up. And now here in 2021, it's getting much bigger. So you do have folks walking around where they're like, I've got a wallet with like 10 Bitcoins in it, and each Bitcoin's worth about $50,000 right now, and I cannot access or find it or get my Bitcoins.
That's right. And there's no one else in the world that's got that password, so they're in trouble. Anyway, so You can't lose your wallet, but the wallet also verifies transactions. What can you do with the wallet? We can store the cryptocurrency you bought, but the wallet also allows you to exchange it and buy different cryptocurrencies, exchange it for different cryptocurrencies, etc. So we don't want to go too far into the wallet, but hopefully we've given you enough. We don't want to go too far deep into any of this because we don't really know all that much about it, but we're learning slowly.
So I think just to summarize, I mean, cryptocurrency is designed to be a currency, but the next thing we want to talk about is why is it so hot? And it's really right now, Tom sent out a great blog last week about that portion of it, about, if it's designed to be a currency, is it really actually doing what a currency is supposed to do? The answer is no. If you read the blog, the short version is just, it's too volatile right now. And so a lot of folks are really using this as an opportunity to try and use that as a growth investment and make money. And that brings up the question, why is it so hot? And should you jump on board and actually hold it for any reason? Is there any reason to use it as an investment vehicle if it's, not really doing a great job being a currency for most folks?
Yeah.
Why are so many people wanting to buy it and trying to hold it and trying to make money off it? So
yeah, I'm looking at the crowd out there, and I think everyone is of age to remember the dot-com boom in '99 through 2001 or whenever it busted. But let's go back there for a little bit, because this has a lot of similarities to that. If you remember back in 1999, any company that had a .com in its name went public, they were being way overvalued. It was amazing, right? And a lot of them didn't survive. But here we are, 2021, a lot of them did survive, and they are some of the largest, most profitable companies around today. Amazon, Netflix, Microsoft, all these companies, they survived. A lot of them went to zero, okay? But back then in 1999, think about it, there was only 250 million people were online. Today, 5 billion people are online. So think about how much money those companies that did survive made, okay? So we kind of looking at this cryptocurrencies as possibilities that some things could happen, because let's say this thing grows, right, and it gets more acceptance. That's the $1 million question. Is it going to grow? Is it going to be used? Is everybody going to go to crypto and get rid of their local country's dollars? Okay. If that's the case, this thing is going to be huge, and there are going to be huge winners and losers, 20 years down the road from now. The argument against it, as I said in the blog, is that all the central banks say, oh no, this is going to, we're not going to let the currencies get out of control. We're going to squash this thing, right? Good example. Let's say you're a drug addict and you're buying your heroin using Bitcoin, okay? A lot of people do this because it's untraceable at the moment. Well, let's say the government comes down and says, listen, if you're going to be accepting Bitcoin, you've got to give us the name and the address or phone, some address of the person who you did that transaction with. Well, that's going to bring all the heroin buyers, that's going to put an end to that real quick. That's the kind of regulation that people are afraid of that could really put an end to this stuff. Because I do think it's being used for a lot of illicit, businesses at the moment.
That was the main adoption. And I think that's the interesting, when Tom and I were talking about, that's the really interesting thing to think about as far as the difference between the .com, era and crypto in today's era. In the .com era, you're talking about technology companies. So these are companies producing products that consumers were using to try and better communicate, better, use their, use technology to just improve their businesses. But all of that was very focused on the private sector, where we have capitalism and we have a free market economy, and that allows us to, create products and sell services. And so there are going to be winners and losers there because the consumers there was that private market. What's really interesting here is, cryptocurrency is a direct competitor to the US dollar. And the US dollar is a very regulated thing, and a big part of the government. That's the reason we have the Fed, and we have, you know, the folk that we create the dollar, and we have all sorts of protections around to try and make sure we have a stable currency. So that's what's really interesting is the, you know, governments around the world are going to have to figure out how to address this, because you know, they're really the competitor in this. You know, when you're talking about Facebook versus MySpace, and Facebook is really the winner in those two today, as we can see. Well, crypto versus the US dollar. I mean, who's going to be the winner 20 years down the road, and how is the government, you know, going to respond? Not just the US government, all governments around the world. And recently there's even been announcements of certain governments already taking steps to say crypto is just banned. We're just banning it. You can't use it in the country. And so if those, you know, I think it goes one of two ways, and that's what we were talking about too, with like risks in crypto. So it's really hot. People are making a lot of money, just like in tech back in the 2000s, but the risks are absolutely huge. And, you know, the ones that we went through, regulation, like you and I just talked about, I mean, whatever that looks like is probably going to be bad for crypto as far as being able to continue to expand. Most of the time, the governments are going to want to have some control. The other one is just volatility. You cannot call yourself a currency if you are as volatile as Bitcoin is today. So they have to, at some point, it has to level out to something that people can reasonably feel like tomorrow it's going to be worth a similar amount as it is today. Because otherwise, it's like living back in the 80s when there was hyperinflation. Everyone was just concerned that at the moment you got a dollar, you wait a week and it's going to be worth, you know, 5% less or whatever. So, you know, really the main way that you would buy Bitcoin is through what's called a Coinbase account. There's a couple other ways that you know, folks can buy coins, but you'd hold it in a wallet. Now we're going to talk about here, well, we can talk about it now essentially, but there's other ways to invest in cryptocurrency, not where you actually have to hold the coin or buy the Bitcoin. Some of those ways are, you know, okay and kind of interesting, like the recent IPO this past week with Coinbase. Coinbase, you can either do one of two things. You can go to Coinbase and open an account and buy a Bitcoin there, or you can actually go to the New York Stock Exchange and buy a share of Coinbase, the company. And so what's really interesting to us is that Coinbase charges a 2% fee if you want to buy a Bitcoin. So it's actually a pretty high fee, because Bitcoins are over $50,000 right now. So every person that buys a Bitcoin for 50 grand pays a 2% fee on that to Coinbase for their facilitation of the transaction. And so you can hold the Bitcoin in your Coinbase account and hope that Bitcoin goes up or down and try and make money on it that way. Or recently, now with this new IPO, you can almost buy the toll booth, where if you want to, instead of investing in the actual crypto, you can just invest in the means with, you know, like the credit card company, essentially, who's just getting the transaction from these exchanges. So that's an interesting development, something that hasn't been around up until very recently. And so I think it's good. And then the final one, which is the most inferior of all of them, is there's ETFs out there. One's called like Grayscale Trust. The ticker is GBTC. It also charges a 2% fee. So you're paying the same as if you go to Coinbase, except you own a trust and you don't own the actual coin.
So your question real quick, you go to the Coinbase app, like any other app on your phone, you open up an account. That account then gets linked to your bank account. And so you then take money out of your bank account and exchange it for a cryptocurrency. Well, first you have to find someone who accepts cryptocurrency as a payment, okay? There's been lots of stories around. There's a pizza store in New York that accepted it and things like that. Elon Musk will now accept it, right? If you want to buy a Tesla, he will accept cryptocurrency to pay for it. He'll accept Bitcoin at least. I'm not sure if he's accepting others. And that's the whole point, right? Very few people accept it today, but it may grow and expand, and no one knows where this is going. And if someone tells you they know where it's going, they're lying. But the point being, if you wanted to say, for our clients, if they said, hey, we want to participate in this at some level, right? We would encourage you to be a very small level, at a level where you can afford to lose whatever you invested. But there are things we could purchase, like stock like vehicles that Clayton described, and you would be participating in it. Again, Coinbase is kind of a good way to invest because you don't care whether Bitcoin goes up or down. You don't want that mess. You just want to take the 2%, right? The fee, like buying Visa or buying MasterCard, or those kind of financial type things.
Liz, that was a great transition to our last topic. So we have covered everything that we had on our list.
Okay.
So at this point, we're going to open it to more questions. If you can unmute your mics and just speak into your microphones and ask a question. If you can't get your mic to work, I'll keep the chat box open on my side. So if you want to chat to just the AP Wealth Management one, then we'll get the question as well. So we'll sit tight for a few minutes, see if anyone speaks up with questions, and watch your chat box.
Just while we're waiting, I'll give you some vocabulary on Bitcoins. Like a dollar is made up of 4 quarters, 10 dimes, 20 nickels, or 100 pennies. 1 Bitcoin is made up, you can get change for a Bitcoin, which makes sense, right? So if you buy a pizza with a Bitcoin for $50,000, you got to get a lot of change back. So you can get 1,000, let's see, 1 Bitcoin equals 1,000 millibitcoins, or 100,000 or 1,000,000 micro Bitcoins, or 100 million Satoshis. And if you're familiar with Bitcoin, you know that Satoshi is the fictional creator of Bitcoin. And it's kind of funny. That's kind of the equivalent of our penny. They've named them Satoshis. So just interesting stuff. He created this. What Satoshi created was a white paper, and I've actually attempted to read this white paper. And boy, it's tough. But if you're having trouble sleeping, this is a great thing to read. But it's amazing how much emphasis was put into cybersecurity, the whole blockchain, which tracks the transactions. So it's I'm not going to say nothing can be hacked, because the world we live in just seems like everything can be hacked. But boy, this is really off the charts when it comes to people creating something that cannot be hacked. So this will be really interesting to see. It can be lost, as we've explained, but it really can't be. It's hard to be stolen or hacked, as far as I can tell. Coinbase right now has 50 different coins that they're trading. So I think that's a good estimate. The main ones are like Bitcoin, Ethereum, XRP, Dogecoin. You probably heard of maybe 5 to 10 of them, depending on how much you read. But then there's these people, you can create them pretty easily. But the question is, how do you get people to buy them, right? This Dogecoin is hysterical, right? I mean, it's worth nothing. It's worth absolutely nothing. And it's gone up 8,100% this year. It's gone from like a penny or a half a penny to 39 cents for 1 Dogecoin. And there's billions of them out there. There's no restriction. They just keep making them. They're made off of like some sort of riddles or puzzles or something. When people solve, then they get Dogecoin. But it's just unbelievable how. But a lot of people, a lot of these, I'll call them millennials for a lack of better term, are taking their 1,400 stimulus checks, opening up a Robinhood account, and buying this stuff. Okay, but the point is, as long as Elon Musk and some of these other famous people are out there pitching these things, that's gaining interest. As soon as they stop doing that, these things are going to come crashing down until they have some sort of value. Bitcoin actually does have some sort of value because there's only a fixed number that will ever be mined, right? I mean, there's 18.5 million out there, and there's only going to be a total of 21 million. So there's a fixed amount on that. But these other coins don't work that way. They can have unlimited amounts of money, just like the U.S. Treasury can print an unlimited number of dollars. when you go to buy something with your credit card, right? You buy it you buy something at the store for $100. Okay, let's say you go to Publix and you buy some groceries for $100. Well, if you use your Visa card, Publix is only going to get $95. Visa is going to get $5. Okay. The point with Bitcoin was no, if you pay with Bitcoin, the intent is that Publix gets the whole $100. They've eliminated that middle person. So same exact concept from an electronic standpoint, cashless transaction, the point being to eliminate that middleman.
That's a pretty technical question. Bitcoin, when it was designed by its founder, was designed to only have 21 million total Bitcoin ever mined. And in order to create a new Bitcoin, at the very beginning, it didn't take that much because you could have a couple actually like home computers that would essentially what they're doing is they're taking these transactions and building a ledger, a digital ledger. And once that ledger is built to keep track of how Bitcoins are being transacted, the people that are building the ledger get rewarded with new Bitcoins. So they get a Bitcoin for doing the work to keep the ledger. And then, the folks that are transacting the Bitcoins know everything's safe and secure. So that's how the new Bitcoins get minted. The issue is that today, to mint one Bitcoin takes almost an entire building worth of computers, like a whole, week or 2 weeks, because it requires that much computing and processing to build the ledger and actually, mint the Bitcoin. And the founder knew that this can't go on forever because at some point, just like compound interest, the computer processing required to mint a Bitcoin would just be, too much. So they pretty much said, hey, at 21 million Bitcoin, it's done. That's as many Bitcoin as there will be. And then the hope is that there's enough adoption at that point that if everyone keeps using them, that they'll be a currency. It'll actually be used. And at that point, it's a fixed amount too, which will get real interesting because it's kind of like, no different than with your home situation. As soon as your neighborhood gets built out and they can't build another house in your neighborhood, well, now everyone's got to figure out what the actual price of the homes are in there, because you can't go build a new one. So all the secondary market really gets priced in, and that's what's going to happen to Bitcoin when you can't get another one. So.
And that's why it trades at $50,000-$60,000, right? Because people are making assumptions about what type of adoption this will have in the world economy. Well, the world economy is huge, right? I mean, the U.S. alone is 22 trillion. So the world economy is somewhere around 80 to 100 trillion, and you just say Bitcoin gets 10% of that, okay, and then divide that out by 21 million coins. That's a very valuable Bitcoin. And that's what people are doing. So the $1 million question is, what adoption rate will Bitcoin see down the road? That's the whole point. And that will then determine its value because it'll be completely a supply and demand situation because the supply is fixed.
Yeah. And that one really key question, which I think is important for everyone to hear, is, what level of risk does AP Wealth today assign to crypto investing in Bitcoin? I teed it up, Tom. I teed it up. Go ahead, man.
It's off the charts. And I know, it's funny. I'm going to share for a second. Can you share that? Get that chart back up, Clayton. I know a lot of you have been on a lot of these briefings with Gene, and we kind of go through these charts. Gene kind of flips through these charts and we talk about, well, that chart right there in the upper right-hand corner, right? That's your risk reward, risk return chart, right? So as you move out on the horizontal axis and take more risk, right? Theoretically, you may enjoy more return, okay? And that's the way investments work. Well, think about, where is Bitcoin on this chart? Bitcoin is not on this chart. It is so far up and off the right-hand chart. Right now, it's just, we're back like, it's where pet.com was in 1999, right? Or, anything.com was. It's just highly speculative. Doesn't mean it's not going to work. It's just that it's really hard to tell right now. So, Clayton and I, we've talked to a few clients about it, and I actually have a couple clients that have bought the Grayscale Bitcoin Trust, but I can assure you it's a very small piece of the portfolio, and if it goes to zero, they can handle that risk. So we see that, but that doesn't mean, we're going to be watching this thing carefully, because, Coinbase may be a very good way to invest in this. And other companies built around these cryptocurrencies may be very good investments. So it's something we're certainly going to pay attention to. But right now, when you're meeting with your advisors, I'm pretty sure none of them are highly advocating you jump into this stuff.
No, we are not putting this in portfolios.
It is not in our model portfolio. No,
not going in portfolios. I'm happy to field questions and help individuals that have a curiosity about it. Absolutely happy to talk through that with folks, but from our portfolio management standpoint, we are not buying these things. So, another question that came up, Tom, is it says, when so many investors are currently so high on the stock, this is based on Coinbase, so we're buying a lot of volume of Coinbase with the IPO. What's the reason the price of the stock continues to drop? Or is that the $1 million question? So why is Coinbase going down versus up since its IPO is really the question.
Okay.
Because it's getting a lot of trading volume, but it just doesn't seem to be going up.
Good question. I traded IPOs for about 15 years before I came to AP Well. So I love following these IPOs. The Coinbase IPO is what was called a direct IPO, which means it was not done traditionally, and I'm just going to leave it at that. But it basically, it allowed the employees of Coinbase, the owners, a lot of stakeholders, the early private investors in Coinbase, it gave them a chance to sell their stock, because it wasn't public, they couldn't sell it. So they did have some investment banks help them out. And if you read about it, you knew that the initial projection was that the stock was valued around $250. Okay. Well, like a lot of crazy IPOs that we saw back in the 90s, and this one opened up, the first trade, okay, was $380. Okay. Well, why was that? Okay. Well, what happened? You had so many people trying to buy Coinbase at the beginning. Okay. And you don't have enough sellers. People, they don't want to sell. Okay. So at $250, you had a ton of buyers and not enough sellers. Okay. Well, let's raise the price to $275. See, a few more buyers, come in, a few more sellers come in. And finally, until you get up to an equal amount of buyers and sellers, that's called the clearing price. It was $380. Okay. Now, that's high. Okay. If you look at the value of Coinbase, that's high, and you're putting a huge growth rate on that company for it to sustain that. So I think what's happened is there was a lot of maybe irrational exuberance, let's call it, on the first day. And I think it's like a pendulum. The price is going to swing. It's going to go up 10 to 20 bucks every day for the next 2 months, and then it's going to settle somewhere. It might settle at $250. It might settle at $300. It might settle at $500. I don't know. If you remember the Facebook IPO, Facebook went public at 40. It opened at 44, and the next 2 months it dropped to 18. Okay, but once it hit 18, then it went straight up. So I would say, if you're interested in Coinbase, if that thing drops, below 280, and it gets anywhere near that 250 range again, it might be interesting to dip your toe in and start, get some.
Yeah, and you would expect Coinbase, as it matures, to at some point hopefully give a dividend, which would be not, 'cause that's
Yeah.
the whole point of it, is it's more of like a credit, so it eventually should grow into just a really value play at some point as it matures. So that's the other thing to think about, is you got to kind of just, the reason to hold it is probably over the long term is going to be more because of the value and hopefully a dividend you can get off it. But it's going to take a few years to get it to that point where actually we'll start kicking that dividend off and being a little more value play. So right now it really is hard to know what the market, everyone thinks is worth something different. And until you go through a couple months, it's really going to be, a lot of unknowns. But pick some up if you're interested. We would just say start small. If you are going to get in there, that way you're not caught just riding a downward trend. If the final kind of price ends up being a lot lower than what it is today. So
yeah.
All right, guys, I think we've got all the questions so far. Any other questions out there before we wrap this up? Going once, going twice. All right. Hey, we have really enjoyed our time with you guys tonight. Thank you for joining us. We appreciate all the trust you guys put in us. And as always, if you have questions, you know where to find us. Also, if you have friends or other folks that have questions around this stuff or anything else, you know where to direct them. We're here to talk with them and help them as always. So hope you all have a great night and look forward to talking to you soon. All right.
Good night. Thank you.
Bye, guys.